Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. So in the gold market we've got surprisingly active reaction on the European Central Bank statement. Market will have taken it with some enthusiasm, inspiration. As you can see, a really big rally has happened. So I suppose that it was especially pleasant to hear that the European Central Bank intends to start the quantitative easing. So although they call it with different letters, so if previously it was PEPP program, now is ITP program, but anyway, the idea stands the same. So they intend to keep buying bonds from the open market, and what is more interesting is that they intend to buy most toxic bonds. So bonds with of the currencies of the countries with a really big debt to gross domestic product ratio. These countries as Spain, Portugal, Italy, Greece, and so on. So in that circumstances, it definitely suggests that no decreasing of the inflation happens in the European Union in near term. Rising of the yield for 0.5%, it's just, okay, it's a very anemic decision and can't make any impact on the current situation when you have the 10% inflation in the CPI. So as a result, you could see the performance on the gold market. On the daily chart, since we've got yesterday bullish reversal bar right there, it suggests some kind of the wash and rinse of the XOP, because here we actually start thinking that maybe market indeed will start going to the next monthly target, but you can see instead of that, market has shown some kind of the wash and rinse and shows the bullish reversal bar. It suggests the possible further upper reaction should happen. And from that standpoint, it is interesting to see that the most recent downside action looks like really good thrust on the daily chart, which is potentially might be the background for bread and butter sell, for example, that could start from the 1750. So that's one of the possible patterns that we could consider. If market somehow start moving higher, in this case we're returning back to the 1790, 18 even area. And this is also really nice, attractive area to consider taking the short position, just because take a look, this is confidence, previous lows, and daily overbought area. But with the anticipation of the events in the United States on the next week, well, I'm not sure definitely that market will be able to reach the 18 even area. We will see, but anyway, we should keep an eye on this area as well. If market will reach it, then this will be the good background where we start searching for bearish reversal patterns on the lower time frames. That might be nice area to consider taking the short position. On the lower time frame, on the 4 time frame chart, since we suggest that possible upward reaction could happen, at least to the 1750, we could consider this reverse head and shoulders pattern. With the left shoulder ahead, once market reached the 1724 area, we could get some pullback and then watch for an area around 17 even, where a right arm might be formed for possible taking the long position and possible ABCD pattern to the upside of this continuation. Another reasons in favor of possible upward continuation. So if you take a look at the hourly chart, first of all, the harmonic swing has been broken up. Second, if you remember right there around the harmonic swing, we have the confidence area, and the confidence, although it has triggered this deep retracement first at the first touch, it later also has been broken. Now take a look, market is coming to the 1722 fib level. That is agrees with the neckline on the 4 time frame chart, and that might be the reason for a possible pullback. So here, as you can see, overall setup is relatively clear. We are watching for an area around 17 even, where potentially right arm of the pattern might be formed. And then we could consider taking the scalp long position with possible upward performance somewhere to the 1740, 1750, first daily fib resistance level right there. then we will see. Maybe we get the bread and butter sale. Maybe market will keep going higher. We will see. But currently, we are just watching for this pattern. That's actually the background for current performance with a few sessions.